What if I told you in just 12 months your silver absolutely crushed both gold as well as your Nifty? Yes, this metal most of us normally tend to ignore outperformed your India's biggest index by a mile. Today we are ranking Nifty versus gold versus silver by real returns, and I'll also reveal a long-term performance, volatility, and how a smart Indian investor should position yourself for the next cycle. So stay till the end of this medal ceremony where silver wins gold, gold wins silver, and Nifty gets a participation certificate. And I'll explain why that's actually not a bad news. Hey everyone, my name is Anand. I've been posting financial as well as technical contents on this channel, Macwin. And if you love this data-backed investing videos with clear, no-nonsense ideas, hit that like button, subscribe, and ring that bell so that you never miss any weekly updates from us. So let's dive straight into the numbers. Okay, so let's begin with the latest scoreboard. So who actually won in the last 1 year? So the 1 year returns is like silver is up anywhere between 58 to 70%, which means like silver nearly touched $50 an ounce, its highest ever rise since 1980. So industrial demand from solars, EVs, and electronics made these push really high, and it made the prices increase from 1.65 lakhs to 1.67 lakhs per kg in India. So gold, another stunning metal, got a 40 to 60% jump in INR terms. So roughly it's crossing about 1.2 lakhs per 10 grams. The reason why is because central banks started buying huge amounts of gold. They started accumulating huge things because of rupee weakness and to shorten up the rate cut expectations and stuff. Whereas Nifty on the other hand just was like 1 or 2% flat even after some negative weeks in the market, and Nifty indices are still showing up this data. So the metal rally is like correct. Silver is like the first, gold followed by that, and ending up with Nifty. So but before you dump up your equities and rush to buy up your silvers and gold, this is just a snapshot of just a year, and this is not the full movie. So you should know like how exactly this has happened in the past, and you should always go with a long 5-year or 10-year data to see how the future or how the market has always worked in the past to predict up your future. So why did the silver and gold rally, or why did they explode? So let's decode the drivers. Silver has got a huge tailwinds from the industrial boom because of the solar panels, EV batteries, and semiconductors. Everyone needs silver. So as a green capex ramps up in the industries in the market, silver gets a permanent demand boost. So in India, the physical supply was very tight. So dealers were charging a huge premium over future prices. So because of that, your silver prices skyrocketed. And the golds also had got tailwinds because the central bank, which is across the world, kept buying up gold in huge volumes. So they were trying to diversify away from the US dollar. So they were trying to add safe haven flows towards this global uncertainty, and that's the reason why this gold boomed up to 1.2 lakhs per 10 grams right here in India. Whereas Nifty had a problem because the global indices were all like held up with or targeted with your AI boom, and AI was leading this market this whole year, and India does not have any big AI players yet. So the FPIs were like pulling out their funds, the FIIs were taking out their funds, while the domestic SIPs were kept buying just to keep the Nifty range bound rather than a drop. The bottom line is like the precious metals shined because of the world wanted safety and scarcity, and equities took a breather. They were just trying to stay cool. But this is just a single year story. Let's try with a 5-year or a 10-year perspective and see what happens. When you compare with your 5-year CAGR of Nifty, it is 17.8%. And if you see a 10-year CAGR, that's going to be like 13.3%. That's a serious compounding. When you compare with your FDs, which are just 6%, this is like a serious compounding. And the reason why equities still form the core of most of our portfolios. Whereas gold on your 10-year CAGR is like 13 to 40%. That's a rock solid and remarkably consistent value from gold. Whereas if you consider a case of silver, silver's 10-year CAGR is like 9 to 11%, but it has got like huge swings. So for long term, gold and equities run neck and neck, and silver lags in average. But there are explosive spikes like this year. It happens often in silver. So always think of silver like a sprinter in your portfolios, in your investment plan. Always have gold as your marathoner because it's been like time and tested over many years. And Nifty, consider them as your casual gym membership. Like you need to like build up your muscles over time. So always have your Nifty as something which is very sturdy for reliable things. As we all know, every reward comes with a risk. So silver has got the highest volatility. That's around like 25 25% annualized. It can even double up or it can drop to 30% in less than months. So that's the case of silver. And gold has got half the volatility of silver because it's giving at 12%. It's more stable. It in fact acts as a shock absorber when markets crash during your COVID times or during any abnormalities in the market. They take all the shock. Nifty is volatile too, and its risk is tied with its growth. They've got like earnings, valuations, foreign fund inflows. So if you want to invest in India, let's take like different routes here, because buying these assets today is like really simpler than ever. And if you're at all you wanted to buy gold, go always with SGBs, your sovereign gold bonds if you're looking for a long-term saver, because you get interest plus no capital gains or taxes at maturity. Or a better way would be if you want like instant liquidity, gold ETFs are the best, or the index funds, which are like perfect for demat investors. So if you have your demat accounts, you can buy them. For a fun fact, India's oldest ETF, Gold Bees, Nifty Gold Bees, has turned up to a multi-bagger since 2007. You can see their compounded results. And if you take your silver ETFs and FOFs, the fund of funds, there's no need to store physical metal. Just check tracking error and expense ratio of these and just get invested on them. And Nifty, again, stick to the Nifty 50 index funds or ETFs for core exposure. Add mid caps or next 50 for your extra growth, but always respect valuations. If at all you ask me about my allocation thought, if your portfolio was too equity heavy, this year would have proved why your 5 to 10% of precious metal can stabilize your returns. And for silver, keep it as like a satellite bet. Do not count it on your portfolio. Normally, these kind of questions come to your mind, like should you switch your portfolio from Nifty into silver now? Never do that. Don't chase the best performer of the year. Rebalance gradually instead. Always go with your SAP route. So is gold too expensive now? Maybe yes, for the short term, but the central bank demand as well as the macro hedgings are strong. Do SAPs or like try go with staggered buyings. That's the best bet would be. And the next question which may come to your mind is, are equities broken because AA rallies or happened abroad? Not at all. Indians are also having their own earnings and own growth cycles. SIPs actually benefit from volatility. There are a lot of big AA players who are coming up into the market. There are a lot of semiconductor stocks which are like really throwing up into the Indian market. Alright, let's come to the award ceremony. Gold medal, it's definitely won by silver for that monstrous one-year run, powered by your industrial demand as well as the tight supply. The silver medal is backed by gold for its stunning year-to-day returns and a reliable hedging role, and the participation role is definitely given to Nifty for its quiet 1 year and 10 years of CAGR, which still beats your inflation and has added up wealth to your hands. Always remember, these cycles rotate, but always your discipline compounds. So keep your core in equities, hedge it with gold, and use silver as a stopping toward, not as a main course. So if this video has helped you understand the 2025 metal rally, smack that like button, subscribe if you haven't already, and drop a comment below. What's your current allocation of gold and silver? Do leave them in the comments. I would love to see what you guys come up with. Thanks for watching, and I'll see you in the next one. Thank you.